Which of the following statements best reflects the difference between personal advice and general advice under the Corporations Act? A. Personal advice does not consider a client's objectives, while general advice does. B. General advice considers client's financial situation before recommending products. C. General advice does not consider client's personal circumstances, while personal advice does. D. Personal advice is only required for investment products, not insurance. The correct answer is C. General advice does not consider a client's personal circumstances, while personal advice does. Explanation. Under Corporations Act 2001 SB, general advice refers to financial product advice that is not based on a consideration of the client's objectives, financial situation, or needs. In contrast, personal advice is tailored to the client and requires more detailed disclosures and obligations, such as statement of advice. So at REF, Corporations Act 2001, SBS ACAR 175. Under the AMLP Act, which of the following is considered a suspicious transaction that must be reported? A. A client paying a premium by credit card. B. A client structuring payments to avoid ID verification thresholds. C. A client updating their address. D. A client requesting a new PDA. The correct answer is B. A client structuring payments to avoid ID verification thresholds. Explanation. The Anti-Money Laundering and Counter-Terrorism Financing Act 2006 requires reporting of suspicious matters under Z2. If the client splits transactions to stay below reporting limits or shows unusual behavior, it must be reported to OSTRAC. Ref. AMLP Act 2006 to OSTRAC guidance. Mr. Hossain, a Tier 2 general insurance advisor, receives a complaint from a client who claims that they were misled about the exclusions in their travel insurance policy. Mr. Hossain tries to resolve the issue over email, but fails to document the discussion or escalate the complaint. What key compliance failure is Mr. Hossain most likely committing? A. He violated the AMLP fact reporting requirement. B. He failed to comply with either requirements by not documenting and escalating the complaint. C. He provided personal advice without, and so D. He breached client privacy under the Privacy Act. The correct answer is B. He failed to comply with either requirements by not documenting and escalating the complaint. Explanation. Under a SIC Regulatory Guide 271, RG 271 and the Corporations Act SART 1G, financial firms must have a compliant internal dispute resolution IDA system, which includes tracking, documenting, and timely escalation of complaints. Ignoring these steps could be breach of licensee obligations. Ref. RG 271.56, RG 271.79. The Corporations Act SART 1G. Under the AMLP framework, what is the primary purpose of Know Your Client? KIC procedures. A. To verify customer identity and assess money laundering risk. B. To evaluate product suitability. C. To issue a product disclosure statement. D. To promote insurance add-ons. The correct answer is A. To verify customer identity and assess money laundering risk. Explanation. KIC requirements under the AMLP rules require businesses to verify the identity of their clients, assess the risk of money laundering, and monitor ongoing transactions. It is a core obligation to mitigate financial crime. Ref. AMLP rules Part 4.2. The OSTRAC guidance. Which of the following is not a valid obligation under the Corporations Act when providing general financial product advice? A. Provide a general advice warning. B. Avoid misleading and deceptive conduct. C. Collect detailed personal financial information. D. Provide a financial services guide. FAG. The correct answer is C. Collect detailed personal financial information. Explanation. When giving general advice, the advisor must not collect or rely on the client's financial objectives, needs, or situation. Doing so would shift the advice into the personal advice category under SB 3, triggering additional obligations such as providing statement of advice. So at Ref. Corporations Act 2001 SB ASACAR G175. Is Tanaka, an insurance representative, notices that a client purchasing a large home insurance policy appears nervous and insists on using cash equivalents through several channels. She is unsure whether this is a breach and decides not to report it. What is the correct action is Tanaka should take under the AMLP Act? A. Ignore the situation since the transaction is legal. B. Notify her supervisor but take no further action. C. Wait until the client makes multiple claims before acting. D. Report a suspicious matter to OSTRAC promptly through internal procedures. The correct answer is D. Report a suspicious matter to OSTRAC promptly through internal procedures explanation. Under the AMLP Act 2006, suspicious matters must be reported to OSTRAC as soon as practicable. Unusual transaction patterns or client behavior suggesting concealment or evasion should trigger internal reporting mechanisms. Ref. AMLP Act S. OSTRAC Guidance Note 6. What is the primary role of FCA in the Australian financial services environment? A. To set insurance premiums. B. To license financial advisors. C. To enforce criminal penalties. D. To provide free, independent resolution of complaints between consumers and financial firms. The correct answer is D. To provide free, independent resolution of complaints between consumers and financial firms. Explanation. The Australian Financial Complaints Authority (FCAT) handles complaints from consumers that cannot be resolved via internal dispute resolution. It offers a fair, independent and free service, and its decisions are binding on member firms. Ref. ACRG 267. FCAT Terms of Reference. Which of the following is most accurate about the distinction between factual information and general advice? A. Factual information describes products without implying a recommendation, while general advice includes opinion. B. Factual information always requires a general advice warning. C. General advice excludes mention of any financial product. D. General advice always requires personal details of the client. The correct answer is A. Factual information describes products without implying a recommendation, while general advice includes opinion explanation. Factual information simply conveys details such as features or prices, while general advice goes further by suggesting that a product may be suitable for a class of people even if no personal advice is given. A general advice warning is required when general advice is provided. Ref. RG 244. Giving information, general advice and personal advice. Mr. Crawford, a Tier 2 insurance advisor, receives a client complaint regarding an exclusion that was not clearly explained during a product recommendation. The client demands an immediate refund and files a complaint with FCA. What is Mr. Crawford's first legal obligation under IDA guidelines? A. Refund the premium immediately. B. Acknowledge and log the complaint within required IDA timeframes. C. Refer the client to his manager only. D. Refrain from further communication. The correct answer is B. Acknowledge and log the complaint within required IDA timeframes. Explanation. According to RG 271, firms must acknowledge all complaints within 24 hours or 1 business day and attempt to resolve them within 30 days. Proper logging and tracking are essential for compliance and future audit purposes. Ref. ACRG 271.5659. In the context of dispute resolution, which of the following is true regarding internal procedures? A. Firms must respond to complaints within 3 months. B. Complaints must only be recorded if they are made in writing. C. All complaints, whether verbal or written, must be recorded and handled in line with IDA obligations. D. There is no need to report complaints to a SIC. The correct answer is C. All complaints, whether verbal or written, must be recorded and handled in line with IDA obligations. Explanation. A SIC defines a complaint broadly under RG 271, including both verbal and written expressions of dissatisfaction. Firms must track, report, and respond appropriately regardless of the medium. Ref. RG 271.2729. Which of the following best describes the primary purpose of consumer credit insurance? A. Covers income loss due to accidents or illness. B. Protects motor vehicles against third-party damage. C. Pays off loan balances if the borrower dies, becomes sick, or loses their job. D. Covers medical emergencies during travel. The correct answer is C. Pays off loan balances if the borrower dies, becomes sick, or loses their job. Explanation. Consumer credit insurance (CCI) is intended to reduce or eliminate outstanding loan balances when borrowers experience specified events such as death, permanent disablement, or involuntary unemployment. As outlined in ASIC RG 275, it's a specialized credit product not intended for general replacement, travel, or third-party vehicle cover. Options A, B, and D refer to different product types. What is a key characteristic of an insured event in the standard home and contents policy? A. Any seasonal damage occurring in the home. B. Repairs requested by social housing. C. Specific occurrences listed in the policy such as fire, storm, or theft. D. Losses the policyholder forgot to report. The correct answer is C. Specific occurrences listed in the policy, such as fire, storm, or theft explanation. Insured events are clearly defined in the product disclosure statement (PDS). They establish when cover applies, ensuring both the insured and insurer understand the boundaries of protection. The insured event must be an unexpected external event listed in the contract. Non-listed causes like wear and tear or unreported issues are excluded. Mr. Grant, applying for travel insurance, declares he has no pre-existing medical conditions because he forgot about a childhood asthma diagnosis. Upon submitting a claim for asthma treatment overseas, the insurer rejects it due to non-disclosure. What principle allows the insurer to deny this claim? A. Indemnity. B. Duty of disclosure and utmost good faith under S of the Insurance Contracts Act. C. Insurable interest. D. Policyholders' rights. Duty of disclosure and utmost good faith under S of the Insurance Contracts Act. Explanation. Under Section 21 of the Insurance Contracts Act 1984, ICA, the insured has a legal duty to disclose all matters that could influence an insurer's decision. Failure to do so, whether intentional or accidental, can permit the insurer to decline the claim. This upholds the principle of utmost good faith. Options A, C, and D are important, but not directly related to this context. Which of the following scenarios illustrates personal advice under SB of the Corporations Act? A. Providing ESN listing key product features. B. Telling a client this level of cover suits your rental property after gathering its rebuilding costs. C. Explaining that general insurance doesn't cover wear and tear. D. Describing generic benefits of accidental death cover. The correct answer is B. Telling a client this level of cover suits your rental property after gathering its rebuilding cost explanation, because it references specific client need and situation. B. Crosses into personal advice, which requires fact-finding and statement or record of advice. SOROA under ASIC RG 244. Options A, C, and D are examples of general advice or factual information permissible under Tier 2 rules. In a general insurance life cycle, when does binding of cover typically occur? A. When the insurer agrees to accept the risk and provide temporary cover. B. When the client pays the full premium. C. After the policy is issued and sent by mail. D. Only after underwriting is completed and risk is accepted. The correct answer is A. When the insurer agrees to accept the risk and provide temporary cover. Explanation. Binding cover refers to the insurer agreeing to accept a risk before full documentation is issued. This may happen after underwriting, but prior to issuing the formal policy. It's essential for brokers' advisors to clearly confirm when the client is actually on cover, even if documentation follows. Is Iqbal, age 75 and hard of hearing, seeks general advice about travel insurance. She seems confused about her coverage and asks if she will be covered for COVID-related claims. The advisor speaks quickly and hands her a yes without explanation. What is the most ethically appropriate action the advisor should have taken? A. Ask her to read the PDS at home and return with questions. B. Slow down the explanation, ensure understanding, and offer alternative communication options. C. Complete the sale since the client didn't raise objections. D. Explain that because it's general advice, understanding isn't their responsibility. The correct answer is B. Slow down the explanation, ensure understanding, and offer alternative communication options. Explanation. Advisors must recognize vulnerable clients and adapt communication appropriately. General Insurance Code of Practice 2020, Part 9 and ASIC RG 271 emphasize the duty to support vulnerable customers. Simply giving a document is not sufficient. Engagement must be and inclusive. What is the main difference between a statement of advice (SOA) and a record of advice (ROA) in general insurance? A. SOA is used only for life insurance. B. Tier 2 advisors can use ROA for personal advice, whereas SOA is for Tier 1 or complex cases. C. ROA is signed by the client. D. Only SOA requires product comparisons. The correct answer is B. Tier 2 advisors can use ROA for personal advice, whereas SOA is for Tier 1 or complex cases. Explanation. Tier 2 representatives may provide personal advice documented via ROA, which is less detailed than a full SOA, consistent with ACAR G175. SOAs are reserved for more complex or high-risk advice scenarios typically handled by Tier 1 advisors. Options A, C, and D misrepresent the documentation requirements. Esther Chan advises a client who recently suffered a house fire. The client requests immediate clarification about claim entitlements. Esther Chan isn't sure if smoke damage is covered under the existing policy but promises the client full compensation anyway to reassure them. What did Esther Chan do wrong? A. He delayed the claim submission process. B. He referred the client to the wrong department. C. He gave misleading information by assuring coverage without confirmation. D. He failed to apologize for the loss. The correct answer is C. He gave misleading information by assuring coverage without confirmation explanation. Under the ASIC Act 2001, SDA and RG 234, advisors must avoid false, misleading, or deceptive statements even if well-intentioned. Promising cover without checking policy details may lead to client reliance on incorrect assumptions and exposes the advisor to liability. Is Delgado offers general advice on motor insurance and includes price and benefit comparisons for 2 third-party fire and theft policies. She gives the general advice warning, provides the PDS, but neglects to clarify that she acts on behalf of her licensee. What requirement did she fail to meet? A. She didn't use inclusive language. B. She failed to explain the capacity in which she acts. C. She gave factually inaccurate information. D. She didn't perform fact-find. The correct answer is B. She failed to explain the capacity in which she acts. Explanation. Under Corporations Act Sart 1A and ACK RG 168, advisors must state who they represent, their licensee or themselves, to ensure transparency. Providing the general advice warning and PDS is necessary but not sufficient. Options A, C, and D refer to other facets of compliance, not this key disclosure. Which of the following is not a valid example of disclosing a policy limitation? A. Saying volcanic ash fall isn't covered under this policy. B. Explaining this policy has $1,000 excess for storm damage. C. Simply saying that some events aren't covered. C. The PDS. D. Informing this policy does not cover loss resulting from bushfire in specified areas. The correct answer is C. Simply saying that some events aren't covered. C. The PDS. Explanation. Detailed explanation of major exclusions and limits is necessary during advice. It isn't enough to point vaguely to the PDS. Proper disclosure is mandated by AICR G 234 and ensures clients can understand coverage boundaries and avoid surprises. Options A, B, and D meet this standard. What is the key difference between moral hazard and adverse selection in insurance? A. Moral hazard involves intentional claim fraud. Adverse selection does not. B. Adverse selection arises from poor underwriting. A moral hazard comes from product design flaws. C. Moral hazard occurs after insurance is purchased. Adverse selection occurs before. D. Adverse selection is illegal. Moral hazard is not. The correct answer is C. Moral hazard occurs after insurance is purchased. Adverse selection occurs before. Explanation. Moral hazard refers to increased risk-taking behavior after obtaining insurance, while adverse selection occurs when high-risk individuals are more likely to apply for cover. Both are addressed through underwriting and policy design. They are not about legality but risk management. Which of the following best illustrates the principle of fair dealing in the context of general advice provision? A. Clearly informing a client that the advice does not take into account their personal circumstances. B. Recommending a product the advisor believes is the most popular. C. Avoiding any mention of product exclusions unless asked. D. Only discussing the product's benefits without highlighting any risks. The correct answer is A. Clearly informing a client that the advice does not take into account their personal circumstances. Explanation. Under Corporations Act 2001, when providing general advice, an advisor must make it clear that the advice does not consider the client's financial situation, needs, or objectives. This promotes transparency and ensures the client can make an informed decision. Failing to provide this disclosure, options BD, may breach obligations. Mr. Collell, a homeowner, asks an advisor to estimate rebuilding cost quickly. The advisor offers a rough guess based on postcode averages without documentation. What compliance issue arises here? A. He's provided personal advice. B. He's breached privacy law. C. He gave inaccurate and undocumented advice, failing basic record-keeping obligations. D. He violated underwriting rules. In line with the Insurance Contracts Act 1984, which action demonstrates A breach of the duty of disclosure, A. Failing to disclose previous claims history when applying for a home insurance policy. B. Asking for an updated PDS when renewing a motor insurance policy. C. Requesting product clarification from an insurer prior to claim lodgement. D. Omitting known water damage from a property disclosure before taking out landlord insurance. The correct answer is D. Omitting known water damage from a property disclosure before taking out landlord insurance. Explanation. Clients have a duty of disclosure, Section 21 of the Insurance Contracts Act 1984, which requires them to provide accurate and complete information about matters relevant to the insurer's decision to accept the risk. Failing to disclose prior damage, as in options and D, may void the policy or claim. Is Karim, an advisor, is speaking with a client who has recently lost her job and is struggling with mortgage payments. The client is considering cancelling her home insurance policy due to financial pressure. What is the most appropriate action is Karim should take under the General Insurance Code of Practice? A. Explore financial hardship assistance options and explain potential consequences of cancelling. B. Suggest that the client cancel now and reapply when financially stable. C. Recommend the cheapest available product without discussing cover differences. D. Refer the client to the insurer's financial hardship support process and offer payment arrangement. The correct answer is A. Explore financial hardship assistance options and explain potential consequences of cancelling. Explanation. Under the General Insurance Code of Practice 2020, Section 10, insurers and their representatives must support clients experiencing financial hardship. This includes offering flexible payment plans, discussing hardship support options, and avoiding unnecessary policy cancellations. Simply suggesting cancel it. Option B, or product switching without suitability review, option C, is inappropriate. Which principle ensures a policyholder is returned to their financial position before a loss, not more? A. Utmost good faith. B. Duty of disclosure. C. Indemnity. D. Insurable interest. The correct answer is C. Indemnity. Explanation. Indemnity ensures that claims compensate for actual loss, preventing profit from insurance. It is a fundamental principle codified in Insurance Contracts Act. 1. Utmost good faith, insurable interest, and disclosure are related but address different insurance law obligations. Which duty is triggered when a client's policy is up for renewal? A. Provide personal advice if premiums exceed $1,000. B. Renew duty of disclosure. Client must disclose any major changes in risk. C. Automatically reduce coverage if no premium is paid. D. Nothing. Renewal doesn't require disclosure. The correct answer is B. Renew duty of disclosure. Client must disclose any major changes in risk. Explanation. Under IKZ 3, duty of disclosure renews at each renewal. Clients must disclose any changes, e.g. renovations, business use, which may impact the risk profile. Non-disclosure can lead to claim denial or cover adjustments. Option C, D, ignore these obligations. A misrepresents the rule. Under the obligations of the General Insurance Code of Practice 2020, which of the following would most help ensure ethical communication with a vulnerable customer? A. Adjusting the speed and complexity of communication based on the client's needs. B. Avoiding any discussion about limitations of the product to prevent distress. C. Asking another team member to handle the conversation to save time. D. Offering to provide information in large print or another accessible format if needed. The correct answer is D. Offering to provide information in large print or another accessible format if needed. Explanation. Supporting vulnerable clients is a core requirement under the GPP 2020, Part 9. Representatives must tailor their approach by using clear, simple, and accessible communication, including alternate formats when necessary. Avoiding important disclosures or passing off responsibilities can worsen customer vulnerability, and it's non-compliant. Which of the following best demonstrates treating a client fairly in line with ethical standards for general insurance advisors? A. Ensuring the client signs all forms regardless of whether they understand them. B. Clearly explaining key features and exclusions of a policy in plain language. C. Encouraging the client to upgrade to a higher coverage plan just in case. D. Sharing a commission-based incentive if the client buys today. The correct answer is B. Clearly explaining key features and exclusions of A policy in plain language explanation, the Code of Ethics for Financial Advisors, and a 6 regulatory guides e.d. RG 244, RG 168 emphasize honesty, fairness, and clarity in communication, ensuring clients understand the product helps them make informed choices and aligns with the obligation to avoid misleading or deceptive conduct. Options A, C, and D may violate ethical or legal obligations, which practice would most likely breach an advisor's responsibility to manage conflicts of interest. A. Offering both home and contents quotes to client. B. Recommending the product with the lowest premium that meets the client's needs. C. Steering the client toward policy that provides the highest commission to the advisor. D. Refusing to provide advice without complete fact find. The correct answer is C. Steering the client toward a policy that provides the highest commission to the advisor. Explanation. Per IRG 175 and the Financial Planners and Advisors Code of Ethics 2019, advisors must avoid or disclose conflicts and prioritize the client's interests, recommending a product for personal financial gain at the expense of client suitability is a serious breach. The other options present such a conflict